The explosive new film, Flynn, deliver the truth, whatever the cost, exposes secrets behind the government's takedown of General Michael Flynn.
Flynn knew what the intel world had been up to.
He ordered the first audit of the use of contractors. This set off alarm bells.
He told the truth. He was the most dangerous person for Donald Trump to hire. They had to get rid of Flynn.
Flynn, deliver the truth, whatever the cost. Available now. Watch it today. Go to salemnow.com. salemnow.com.
Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday. And man, it's almost here. I think we hit 100 degrees yesterday. You can feel it like in the morning. It's 4 or 5 o'clock in the morning. It's already, high 60s up into maybe the low 70s. It won't be long where, it'll be like 94 at 5 a.m. and 114 at 5 p.m. But get out there while you still can. While it's still, a little bit decent out here. This is the tough months coming up here in the Valley of the Sun. Our toll-free number, 800-951-0592. Of course, the website at allamericangold.com. We told you yesterday we try to help. We try to help, Jason. We thought that gold really had a good setup yesterday, closing the gap that was left on Friday. Gold's up about $16, just right, bumping up on $2,360. Silver, a good day today in silver. Silver's up another 30 cents, and watch out, here comes copper. Jason was doing some math earlier today. We had copper in the penny through 1982. And so after that, they're like, oh, wait a minute, that's copper's too expensive. Let's put, slag in there, whatever. I don't even know what they make it with now. But if you have 1982 or older pennies, Jason, you said they're over 3 cents now, just in copper.
The 3 times face value. I mean, in the 1960s when they pulled the silver, you couldn't get that type of face value. So it's just the tough thing about copper is you have to have so much of it. So you have to really bulldog. You have to be really excited about it. But if you plunk those copper pennies into a jar eventually, and when they demonetized the penny, Canada demonetized the penny in 2013. They haven't had pennies in Canada for 11 years, and when they do that, you can take it over to the wherever you want to recycle copper and just melt them. And where else can you give somebody something and they give you something back that's 3 times value? Where can you get that deal?
Yeah, this is another big move to the upside here in these metals. And of course, we've been telling you this all along. Yesterday we talked about, Goldman Sachs said, hey, wait a minute. This math doesn't work. Right? We're looking at central bank purchases, at least what they said. We're looking at what all the big jewelers, what they buy. We know what the mints are buying and the refiners, the companies that are making, gold bars or whatever they go. But listen, we know all that stuff. And when we add it up, there's a lot of gold that got bought that we don't know who bought it. Right? And they're like, hey, listen, there's only one place. Right? And that would be central banks. Why? Because they don't have to disclose if they don't want to. And, of course, I think really what it is they're starting to look at these inventories, and it's getting scarce. When you think about what Goldman said, hey, our base case, that's if everything goes perfectly. You're going to see $2,700 gold before the end of the year. And then they threw out 2 different scenarios that they said, listen, both of these are very possible. And they were talking about $3,100 gold by the end of the year. You got silver, right? Silver bumping up on 20. I said this at the beginning. We're going to see $30+ silver. And if you just do, let's just keep it simple. Let's just say 3,000 because I'm too lazy to do anything else. Right now, silver, there's like 83 ounces of silver right now to gold right now. That would put silver at 36. I mean, Jason, they look really, really attractive. Both gold and silver look very attractive right now.
You know, one thing I'm thinking about, Joe, that could make gold really go bonkers is it's a little bit of a shell game as far as gold storage. You know, how many of these guys that are storing it actually have what they have? I mean, we sell gold IRAs, you know, and we try to do the best we can to help people out with that. But, you know, how much of this buying of gold is like, well, we'll hold it here, just keep on buying it. We got plenty. I mean, why move it? Why ship it? You know, we'll just leave it here. We'll just charge you a little fee. And what's going to happen if, you know, like a shell game, you have the 3 shells, you have the ball under one of those shells, and they mix it all up, and it's like, well, which one is your gold stored at? Is yours in the empty one? And what if that happens, Joe? It's basically a bank run. You know, gold is actually money. And if someone says they're holding the gold, they don't have it, we could be looking at that. All this buying, who knows? This central bank says they have this much, and this central bank says they have that much. Well, if they don't physically have it in their holdings, then how many of these central banks are going to come up short when it comes time to take possession? So gold and silver, in my opinion, Joe, you have to take possession at least of a certain percentage of it if you don't want to store it in your possession. But that's the only way to really do it, Joe.
Yeah, 800-951-0592. So everyone's going to wait for tomorrow's CPI. I'll tell you this. I know, you know, what Goldman said and Morgan Stanley said, that, hey, don't be shocked if we get a lower year-over-year inflation number, mostly because of the way they do math, right? And with housing that really isn't even indicative of what the real markets are. Matter of fact, rents went up for the 3rd straight month in a row. It just came out this morning, right? But, you know, somehow the Fed's allegedly going to, mask that over. But today we got producer prices, and I'm just going to tell you right now, nobody should be shocked by this. Jason, red hot producer prices, the hottest producer prices in a year. So you got to go all the way back to May of last year to find a number this hot. Yeah, I don't know. I don't care what the Fed says. Inflation's not going anywhere. Joe and Jason, Patriot Radio News Hour on this Tuesday. Quick look in at the market. The Dow's up 40 points. The NASDAQ is up 70. The S&P's up 9. The 10-year note, we'll see how this works. It almost looks like, and of course we get CPI tomorrow, it almost looks like, hey, you guys want to get out of your short positions on the 10-year note with that red-hot producer prices. But right now, the 10-year note's at 4.46. When that producer price came out, it shot up to like 4.52. Back down here, we'll see how this plays out. Crude oil lower today. Like we said, we talked about gold and silver red hot today. Once again, the Japanese yen struggling again. And I'll just say this. As you guys know, you need to be more diversified than ever before because we're in this bubble. You know we're in the bubble. I know we're in the bubble. Jason and I are going to talk about, listen, next month, things start changing again, right? The government runs out of all the money that came in on April 15th, right? The reverse repo, there's nothing in there, right? There's, a pittance left in that thing. And here comes the debt wave again. The next debt wave comes, and again, it's all about, right, well, gosh, can somehow they just cut a quarter of a point and everything's going to be fine? Yeah, no, it's not happening. Demand destruction may be happening. We'll talk about that in a minute. But getting yourself diversified, you got to have that gold and silver. You got to have it. If you, like Jason was talking about, listen, if you have it in an IRA or an old 401k, put some of it into gold. We can help you do that. Check out why refi. We can, 10.25% fixed for 5 years. I mean, that's huge. You got to do 1 year, 6.5. Those are pretty darn good returns. right? 10.25%. Hey, you're going to at least beat it. Well, at least the inflation they say is inflation. You at least beat that. And it's not correlated to Wall Street. Telling you. There's not, listen, I don't know if it's 3 months from now, 6 months from now, a year from now, but this thing is going to pop for sure. And you want to be out of it before that happens. Check them out. InvestYRefi.com. You got to have at least $50,000, but check them out. There's no fees. They don't play games. There's no attack on principal if you need your money back early. 888-YREFI24. Now, Jason, when you see things like we're going to talk about next, this is when you start to get worried. Red Lobster. Now, we talked about Red Lobster a few weeks ago, saying, hey, you know what, bankruptcy may be in their future. This morning, 80 locations in at least 27 states are closed effective immediately. Workers were giving no notice. In other words, the workers showed up, and Jason, there's a sign on the door. We're closed, and apparently, two things have happened. Number one, a liquidation company has started auctioning off all of the equipment that's in these 80 locations. So this isn't temporarily closed, going to reopen, in a couple of weeks. No, we need money and we're out of business. By the way, the union, who is the major supplier to Red Lobster, has severed ties with the chain. So that tells me, James, there's only one reason why you sever ties. When you're the supplier, they're not paying us, right? I mean, that's pretty simple what's happening at Red Lobster right now.
It's not a very cheap fare to be eating anyways. I mean, it's definitely more of a luxury type of food, right, Joe? This is not McDonald's we're talking about with high prices. This is crab and lobster and seafood, which is a lot more expensive to get onto your dinner plate. And we talked about Red Lobster for years about how they've been, just barely hanging on. It seems like they're 10 years overdue for going out of business with how hard it is to run a place like that. I mean, what other seafood places are out there, Joe, except for places that maybe to give you a little shrimp, but there's really nothing out there, is there?
Yeah, it's and again, that's just not how you do it. They had 650 stores. I mean, this is a big deal, right? And you don't lock your workers out. And, oh, by the way, here comes the liquidators, right? We're going to sell everything that isn't bolted down and even stuff that is bolted down. And then your top supplier says, hey, by the way, we're done doing business with you. We'll see what happens here. Obviously, there's for sure going to be a bankruptcy. Let's see. Is it going to be a total liquidation? We don't know yet. Home Depot said, hey, traffic's a little light, right? It's the consumer slowing down today. Home Depot, well, they got different priorities. High interest rates. Home Depot is blaming that as a reason why consumers, they're not doing the projects, right? They're not remodeling. They're not taking out the loan to remodel or whatever it may be. Or the flippers, right, aren't flipping houses because interest rates are high. But, Jason, just another one of these signs.
How can you have a home improvement project when you can't even buy the house to begin with? You got to have the home before you can improve it. And Home Depot having soft sales, if this continues, which I would say that it'll probably continue, then this will now reflect on home sales very quickly behind it, Joe.
Yeah, and then there's this report out, not only Red Lobster, now TGA Fridays is another one they're saying that Moody's is saying may be headed for the bankruptcy filings and saying that they're stressed what they're calling the fast casual dining. That there's major foot traffic problems, and all of a sudden, so again, a lot of these companies, hey, a 5% drop is enough to put them into bankruptcy, Jason, and some of these places are saying, hey, It's not 5%. We got 10% drops literally in just the last 30 days.
Yeah, well, I mean, eating out has become more and more expensive, more and more expensive. We've covered this many times, Joe. And so how many restaurants are going to follow this, Joe? I mean, it's the choices of where to go out to eat are gonna get confined to less and less choices, Joe. I just and you know, when the fast food's getting too expensive, how can casual fast dining be any better? Sit down restaurants, I think, we're actually doing better than I thought, but they're going to be following this.
I'm just, you know, it's funny when McDonald's is trying to figure out, hey, how can we get a $5 meal, right? And they're having a hard time doing it, right? They're like, the math just doesn't work, right? With all of these things. And then April's producer prices came out today, up 0.5% month over month. You know, you do some quick math there. That puts inflation at 6%. If they did that every month, much hotter than expected. They were expecting a 0.3% rise month over month. The highest year-over-year reading since April of last year. The fourth hotter than expected PPI print in a row. So it was hotter in January. It was hotter in February. It was hotter in March. April now, the hottest one yet. So, Jason, it's actually ramping up on the producers.
Inflation just doesn't stop, Joe. I mean, obviously, if things cost reasonably and the prices weren't going up, and how about this? How many of these ailing companies and restaurants would try to stick it out if they thought for any reason, well, maybe this will finally slow down, the prices will stop going up? If there was any reason to believe that, some of these places would probably try to stick it out, right, Joe? But Red Lobster, they've got to believe the prices are going to keep going up, so it's like, well, it's time to give it up. And there's going to be a lot more of this. There's going to be a lot more of this coming up. I mean, at some point you have to declare defeat and move. Because, you know, Joseph, how many businesses have tried to linger on, and you end up getting a worse result on the backside of it?
Yeah, and then the Martins, Wall Street on parade, delinquencies of office property loans at banks has now hit 8%. Okay, so this is office property, commercial office property, now at 8%, which is alarming to begin with. But here's what's interesting. The Martins did some digging, and they found out that the office real estate properties that the banks sold to investors show 31% are in trouble. So the banks are like, well, the loans we kept, there's only an 8% problem. The ones we sold all of you guys, there's a 31% problem. And I know, listen, right, buyer beware, right, I guess, right? But, Jason, that's kind of messed up, isn't it, right? You're taking the bank's word for it, right? They're selling all of these loans and packaging them all up, and the ones they keep has an 8% problem, which is huge. But the Martins went in and said, hey, guess what they did to the investor? 31% of them got problems.
And I think the 31% is just to cover up their 8%. You know, when the housing crash happened and destroyed the economy of the entire world for a while, mortgage-backed securities had just hit 8% failure. And you had economic apocalypse going on. So they're admitting to their 8%. But what they're trying to do is, well, don't look at my left hand of my 8%, which that's the same percentage of economic apocalypse. Look at the 31% of the guys look at the suckers we threw this stuff on. They want you to look at that. But never mind that 8% is a huge number. A lot of people say 8%. You know, well, 8% of $1 million, you got yourself $80,000. Yeah, it's a huge number. That 8% is huge. And they want you to look at all the stuff look how good we were. Look how smart we were. We got rid of 31% failures that we unloaded to some poor sucker. But look at their 8%, Joe. The 31 is just big. The 8%, what if that turns to 10? What if that turns to 12?
So why are we saying, you know, and this has been a slow-moving crash, but like I said, the next 6 months, it's huge, the amount of these that come up, right? the end of their arm is coming up in the next 6 months, and then they're stuck with these balloon payments, which nobody's going to make. A year ago, it was at 16%. So it's essentially doubled. The problem has doubled. We haven't heard that much about it, but the problem has doubled. But listen to this. The Martins are saying places like Chicago, 75% of all office building commercial loans are in trouble. How about Denver? 65% of these in Denver are in trouble, right? Jason, this thing is, it's almost, it's not everywhere, but almost everywhere.
Sure has echoes of the 08 crash and how bad that got. I mean, really, you've said it about 1 billion times, Joe, but if this goes where it looks like it's headed, which is markets starting to show this, the collapse and signs of collapse and crashing, and then you have like Red Lobster, going nationwide, everyone's laying off the job losses. Well, then maybe the inflation slows or stops. And I don't know, Joe. Why do I get the feeling that we have the inflation and we have job losses? Why do I get the feeling this inflation is severe enough that job losses aren't going to do it?
You know what? It's going to take a lot of losses to stop it. You're right about that. Remember Starwood Capital? Hey, there's going to be a bank or two a week failing here in the immediate future. And now you can kind of see why. 800-951-0592, Patriot Radio News Hour, Joe and Jason here on this Tuesday. Jay Powell's talking overseas in Amsterdam, one of those foreign banking conventions, some of the highlights. We didn't expect this to be a smooth road, he said, but these inflation readings are higher than I think anyone expected. Interesting. So you're telling me that nobody at the Fed saw any of this inflation, and again, same old thing, right? What that has told us is we're gonna need to be patient. I don't think it's really a question of keeping policy at the current rate for longer than what had been thought, right? So saying, hey, listen, man, we didn't see it. We thought we were going to be cutting rates already. Not going to be able to, which is going to cause a lot of problems. Especially, we just started talking about all these delinquencies in the office space. Here was something, though, that I thought was really interesting. So somebody must have asked, hey, guys, you say you want 2% inflation. He bragged about, I was actually listening to him talk before we got on the air. His opening remarks, he talked about how great the U.S. job market is. Right? So he's got a dual mandate, full employment, which he just told you it was great. 2% inflation. Right? And we didn't give you the 2%. You told us that it was 2%. Right? That's what you guys picked. And now you're sitting there saying, oh, well, gosh, we were caught off guard. We didn't see it. So somebody must ask, are you going to raise rates? I mean, because isn't that what you're supposed to do? Right? I mean, according to your mandate, well, here's what he said. I don't think that it's likely. Based on the data we have, there's that word again, based on the data we have, that the next move we make would be a rate hike. I don't think that's likely. I think it's more likely that we'll be at a place where we hold the policy rate where it is. So I guess, according to Jay Powell in his speech at the foreign banking in Amsterdam today, saying that, listen, we're not going to raise, we're done fighting the inflation. We've fought it as hard as we could. We're going to give up there. But, Jason, no indication that there's going to be a rate cut anytime soon anyway.
No, there really shouldn't be anyways. You know, when you got the inflation running and prices going up steadily month after month, the key factor to keep it down is to raise the interest rates to cool the inflation. So there really shouldn't. There's still this piece of me, Joe, that if they get enough, Red Lobster information out there, that they'll try to lower the rate sometime before the election. And you won't even believe this. It'll be a Democrat. It'll be sitting there saying, look, the Dow is at the highest record level ever because of the irrational exuberance of buying on the 1/4 point rate reduction. I can see it now, Joe, and I don't think it's going to win an election for the guy. It's usually that's what the Republican brags about, right? It's a backwards world. Got a backwards world going on, and it could happen, Joe.
He did put kind of a time limit on it. Said that they'll need another quarter's worth of data before they can make a decision. So that puts us where? That puts us right into summer, right? That puts us June, July, right? Hey, we're going to need, May, June, July. We're going to need that data before we can commit to telling you when we're going to cut rates. And, Jason, I'm going to tell you right now, I think you may be right. Because if they're serious that they're not going to lower rates and they're going to wait another 3 months, I think you're going to start seeing a lot more bankruptcies, a lot more hardship, and you're going to start seeing banks go under. That's just what's going to happen.
And I believe they're going to want, up to the November election, try to show as rosy of a picture about the economy as they possibly can. And look at all the Wall Streeters, man. They are thirsty. They're almost bleeding to get a rate reduction, and just throwing them the bone of a 1/4 point. Can you imagine all the ridiculous overbuying that's going to go into the markets just on that? Right. Lowered it 1/4 point, then they're going to lower it another one. Then they're going to lower it.
That's right.
And what'll happen And what'll happen is after the election, the inflation will come roaring back up like a bomb, and it doesn't matter who's elected. Those rates will go right back up. They'll go right back up with roaring inflation. And good luck to whoever the president is, because they're going to take the blame for it.
Yeah, the Dow's down on that news, on Jay Powell's news, right there. It's down now. Yeah. Oh, my gosh, he's going to wait 90 more days. What are we going to do? What's going to happen here? And let's not forget an overwhelming supply of U.S. debt coming at the same time, that overwhelming supply of delinquent office space. All of that's coming, Jason, in the next 6 months.
Man, next 6 months. And I've been talking, June. We talked yesterday and then a little bit today of 2,700 gold to 3,100 gold. I think the 2,700 gold. Usually in the summertime, Joe, you've always told me, and I haven't watched it as many years as you have, but usually summer kind of cools off, and there's less emergency in the news cycle, and people are looking at vacations and fun times, but that might not be this summer. And I see June and even into July as gold could be very strong. May cool off. I'll say this, just before the election or even just after the election, I could see gold cooling off. I could see gold running in June and maybe in July, and I could see gold kind of cool off for a month or two, even come down some. Then sometime after the election, Joe, we get to late December, mid to late December, and I think gold just tears up, and then 2025 is an entire year of gold going up, Joe.
Yeah, I'm just looking at this here, and part of the problem for us in the Fed, with all of the debt that needs to be sold, it's going to be extremely difficult to keep rates down. They may cut 1/4 point, and the 10-year note doesn't go down, right? Because there's just an overwhelming supply of debt out there. And now if the banks are going to start feeling the effects here of okay, wait a minute, the retailers are slowing down. Now we got bankruptcies flying in our face. The consumer's taking a step back. Now we got all these loans to deal with. It really could put us in a spot where even with a rate cut, it may not help, right? I mean, that's a very likely scenario. Patriot Radio News Hour. We got I just got handed something by Brittany, a red hot special coming up next. 800-951-0592. Patriot Radio News Hour here on this Tuesday. Copper's up almost 25 cents right now. Holy smokes. That's just crazy. Over $5 a pound right now in New York. Amazing. Silver's up 30-plus cents. Gold's up 15. The Dow is down 7. I don't know that we can get a bad number tomorrow. You know, if it comes in lower, like they said that, you know, this year-over-year thing would shelter, I think gold goes up, right? Silver goes up. Look at today. PPI came in red hot. Gold and silver are flying. I don't know. I don't know that any number is going to make a big difference tomorrow. But I will say this. You rather buy sooner than later because when we start looking at what is happening, this is just, it's an easy thing to see. Inventories are stretched. They're thin. There's huge buying. People are trying to get out of fiat. And it's not just the dollar, right? I don't want to be in the yen. I don't want to be in the euro. I don't want to be in the renminbi. They're trying to diversify as much as they possibly can. And that's exactly what we've been telling you you're going to have to do. Today's special, and it's a good one. We've got 145 $5 Indians. 1 through 19 at $6.90. That is the same price as the $5 Liberties. If you buy 20 or more, $685. And I'll just say this. We're probably going to be seeing, you know, $5 Indians, $5 Liberties. You're going to see prices well into the $700 range as early as tomorrow. There's a big move now in the higher grades, AUs, XFs, VS, right? They're all moving higher. Jason, the supply it's the problem everywhere.
Yeah, it's May 14th today, and gold's been holding in this $2,300 range from the low 2,300s to the upper 2,300s. And we moved here very quickly from late February into early April. So I think it really is very possible in June, if we break past 2,400 and it stays a day or two above 2,400, we could start seeing $100 a week move for a couple more weeks. And suddenly you're looking at $2,600 spot price, and to be looking at $2,900 gold, Joe. And it can happen in just a few weeks from now. I mean, it's very possible. This is not just gold and silver. This is a commodities rally. You know, Joe doesn't like to talk about copper because it is a base metal. It's an industrial metal, but it's moving. It's moving at quite a rate. And when you find copper, what do you find? You find silver, right, Joe? And if copper's going up, they're having trouble getting enough copper to those that need it. Silver, they're having trouble to getting to those that need it. And monetarily, gold is just desired by all these central banks in these countries now. This is a commodities-driven, and if it's a commodities-driven rally, that just means one thing. The dollar is weaker and weaker, and you're buying less of these commodities. It's not a rally. It's the dollar crashing. The ounce of gold and the ounce of copper and the ounce of silver is the same. We're going to see gold go way higher.
I'm going to really paint a great, easy picture for you. Right now, the dollar is the strongest thing out there.
I know.
And look at what gold and silver and copper and tin and aluminum and are doing. And everybody, even Jay Powell, what did he say today? Oh, no. We're not raising rates anymore. Right? It's all about when can we start cutting rates? When can the dollar start weakening? That's when you're really, like I said, this isn't you know when the big move is? When the Fed has to start chopping, and I'm not talking about 25 basis points, we're talking about 50 basis points and more, that's when you're going to see the big moves. That's when this is going to occur. And Jason, you're right. I really thought, when we said this back in April. Hey, listen, June. We're telling you June. And it's early. I thought we were going to get at least another couple of weeks of consolidation. It doesn't look this way. You start looking at, what Goldman said yesterday about gold inventories. And, hey, nobody's telling us who's buying it. Right? And there's a huge discrepancy. Look at what's going on with copper, silver, a massive. Or yesterday, what did I tell you about platinum? All of these metals, every 90 days, all as they say is, oh, wait a minute, the shortage is going to be worse. The shortage is going to be worse. The shortage is going to be worse. And it's driving these prices, and it's doing it with, quote, unquote, a strong dollar, Jason. That's the really impressive part.
I'll just keep going back to Janet Yellen, dropping by China there and what was actually said. I mean, because she's the Treasury Secretary. Technically, her job is the dollar, right? What was she asking China for something? Was she asking them to do something? Was she asking them for information? What are you going to do? Was she requesting something? Was it a combination of these things? And then she's going to take whatever information she gained from that. And what is she doing? I mean, are they trying to hold these markets? Hey, China's going to do this. They don't care what we want. Can we manipulate these commodity contracts to be less severe than they really are? Because, Joe, for all we know, they're monkeying around with these prices. It could be much worse. The inflation could be much worse. And Janet Yellen is just trying to figure out, well, how do we get us another 6 months before the dam breaks, right, Joe?
I'm thinking that's exactly what they were trying to figure out. Patriot Radio News Hour, final segment coming up. Get those $5 Indians while you still can. We'll be right back. 800-951-0592, Patriot Radio News Hour on this Tuesday. Tomorrow, the CPI number. What's it going to be? Right? They're praying beyond hope that they can somehow get a low year over year. I'll be more concerned about the month over month, to be honest with you. Right? That's going to be indicative. If what the producer prices said today, right? I can't imagine the month over month number being under. The only thing they can hope for is the funny math allowed them to say the year-over-year number got a little lower. I think that's kind of what they're banking on. I think we're going to see higher price tomorrow. We'll see. We don't know, right? If I knew for certain, I wouldn't be sitting here doing this show anymore, right? I'd be sipping Mai Tais on a beach somewhere. Man, I'm just watching copper. Copper's just blowing me away right now. Up 30 cents. Holy smokes. That's another, you know what? They're not supposed to do this kind of stuff. They're not supposed to move like this. And how soon, to Jason's point, do we wake up one day, oops, we got a little delivery problem. Yeah. We got a little delivery problem in silver. We got a little delivery problem in gold. And you see silver go up $5 in a day. You see gold go up $100 or $200 in a day. I think that's kind of what they've got. They've got to get the prices high enough to where that doesn't happen. And I think that's the biggest problem right now. $5 Indians under $700. Get them well you can. Because I'm going to say this right now. Could we see $1,000 on a $5 Indian before the year is out? It's not only is it possible, it's probably going to be pretty close. That'd be my guess. Probably going to be pretty close because I think we're going to see gold over 3,000. So here at 690, the same price as a $5 Liberty. By the way, you buy 20 or more, $685 at 800-951-0592. And, Jay Powell said it. Hey, we're not going to raise rates anymore, but we need another quarter before we can see if we can lower the rate, Jason.
We'll see what happens. I think the CPI year-over-year number is going to be maybe the same or a little lower tomorrow, but I'm going to tell you right now, the year-over-year CPI for May and June, because I always look at the multi-year chart, Joe, the year-over-year CPI for May and June are going to be much higher, just based off because I watched the year-over-year, and then we had significant large drops the previous year. For whatever reason, it all stays balanced. They really have kind of a control over what it is. So I think, we get 3.3 tomorrow, maybe 3.2 at the best if they're lucky. And then watch out for the year-over-year numbers for May and June, which were significant drops last year, which got us down to the threes. We've been in the threes since, June of last year, Joe. They're not getting it any better. And if they're not getting any better, I think they want this, right? They've had a year to get it below the threes. They don't want to do that. So I think we have this sideways number tomorrow, maybe a little lower. And then you watch it go into I bet we get into the fours by May or June, the year-over-year number. And what do they do then? Yeah, it's going to be hard to do a rate reduction if it goes back to the fours, right?
800-951-0592. I just had someone text in ammo prices. Yeah. Boy, they probably hate that move in copper, right? Everything's getting more expensive. You name it. Patriot Radio News Hour. Jason and I wrapping it up.
3-star General Michael J. Flynn, head of the Pentagon Intelligence Agency, knew all the government's dirty secrets.
He was one of the most respected generals in the military.
Flynn knew what the intel world had been up to. He understood its funding.
He ordered the first audit of the use of contractors. This set off alarm bells.
The explosive new documentary, Flynn, Deliver the Truth, Whatever the Cost, uncovers the facts behind this scandal.
Flynn told the truth. He was the most dangerous person for Donald Trump to hire.
I find out the worst enemy that I'm going to face in my life is right here in America. They took my assessment and they wanted me to change it. And I was like, I'm not changing it.
They had to get rid of Flynn.
With in-depth interviews, archival footage, and never-before-seen personal records of the man behind the headlines.
I just felt like I was drowning.
Flynn, Deliver the Truth, Whatever the Cost. Available now. Watch it today. Go to salemnow.com. salemnow.com.